Yo, good morning, guys. Welcome back once again on my channel, Samurai Trader. I have another video for you. Today I almost lost it. Let me pull up the trading executions. There are quite a lot, and yeah, this is paper trading. This is what I was seeing. I'll just remove everything. Like I told you in the previous video, guys, I don't have like paid. I don't have like the paid version of, I don't have the paid of trading this, so I don't have like market replay. Just to show you what was going through my mind when I was taking these losses. So in the beginning of the day, we saw this yesterday. This was yesterday's move. I explained like what happened. I explained what I was expecting. I was able to enter into this trade, going high, taking all these highs, and then the market dropped. The market closed up. The market closed into the Asian session. The market dropped, and then consolidated in the Asian session. So as I was going through the charts today, as I was going through the charts today, what I was seeing at this moment, I was looking at my 15-minute time frame. I was looking at my 15-minute time frame. So this is my London kill zone. Let me just make it a little bit clearer. Where starts. This is my London kill zone. So I saw this. I saw this. At first, I was like, yeah, there's this imbalance. So maybe the market will pull up to that level. Like would retrace after taking some lows. Would retrace, to take these highs. That was my my bias going into the day, like from the London session. But what ended up happening is, I wanted to take some trades. Yeah, I know it goes above, my strategy. But what I was seeing on a lower time frame where I make the entries, this is a sign like that today was going to be sketchy. At first, on the 15-minute time frame, usually I wait for market to do such a move, retrace into this imbalance. I usually wait for the market to retrace in imbalance or take out high before it shows me a shifting market structure. On a 15-minute time frame, that breaking shifting market structure creating a fair value gap, then I make my entries. But today I decided, just to go straight to the 5-minute time frame and look for a shifting market structure there. That was the first wrong move I made. So what I saw in the 15 minutes, like on a 5-minute structure, on a 5-minute time frame. So what I saw going into the London, London Open. Going into the London Open. This was the 2 a.m. Open. So I was seeing something like this, and I saw this as a shifting market structure. Template. I saw this as a shifting market structure, but this is on a 5-minute time frame, and on a 15-minute time frame, there's no fair value gap. This was already a sign that this was going to be a problematic trade. But however, I was waiting for it. I just wanted it to this is the order block. Let me just remove it. It's in daily order block, but it's still being respected. If you see, if I return it, it's still being respected, this daily order block. But for the time being, I will just remove it so that it's not clumsy, so that you see what I was saying. I was seeing these highs, I was seeing these highs as a draw to liquidity. So what I ended up doing on a 5-minute time frame, I saw this move. I was like, yeah, that's the shifting market structure. But usually for my shifting market structure, to be very efficient, the market is supposed to move like let me see, where can I find these? Where do I find these? Usually for it, like the way I see my A plus setups, I wait for such a move like this, and the market goes above, again to take this high, then create a shift in market structure, then this can be entry. So usually if I'm making, like good trades, I expect such a move, with the creation of a breaker, you know low high, low high high, then break and enter. But you can see it didn't make that move. It failed, returning to this, then it broke. So of course it was a micro break in market structure, but not the kind my strategy, or my strategy works on. So I saw this. I took an entry here. Put my stop loss above here. And this was my target. So what I was looking for, the market, to the price to be clean, like very clean. I was looking for price to, move swiftly after. Let me just move this to this. I was expecting. What I was looking for, I was expecting for price to drop suddenly after, retracing to this fair value gap, 5-minute fair value gap, and take out these lows, creating another fair value gap, those big candles. Then take out these, also creating a fair value gap, then reaching to my target finally. But the market didn't give me that. So what I did is I waited, and I was commenting in my Telegram channel, like, I don't like the way price is behaving. So when I saw this, when price retraced to this high, I was like, "Ish, man, that's going to be, another problem. Price actually going to close above my stops." So I ended up like closing the trade. I closed the trade that was almost break even, but not really. It was maybe 0.2 pips, but yeah, that's break even, because that's nothing. So yeah, that was the first trade I took. And let me see. So when I saw that, I was like, okay, maybe now the market is moving, to fill this volume imbalance I was expecting all along before I made this, rush into trading this. So I ended up like, back to back, trying to get back into the market again, where I saw this as a sell side liquidity taken, and I saw this as a shift in market structure, another fair value gap. So I ended up, making another entry. Wow, like, you see, this is how, how it can be if price is choppy. When price is not showing you moves going, above and below, above and below. So this was me again. You can see with my exit, with my stop loss here. I was expecting price, after closing above here. I thought I saw it as a shift in market structure, but you see, it was not like a real close. It just closed a little bit. Of course, it created a fair value gap here and a fair value gap here, but it wasn't quite convincing. And as you can see on the 15-minute time frame, it was also not quite convincing. Of course, it created a fair value gap, but this second candle, which is one of the three candles which is supposed to create a fair value gap, it didn't close above this high. It only respected the high. The wick only, moved above. So this was another wrong move on my strategy. So I saw that maybe I was just forcing trades, and I was indeed forcing trade. The market came back. It took me out minus 10 pips. That's minus $10. And yeah, and once again, I tried. I thought the market was finally going to go my way. I saw this as as an inversion fair value gap going to the upside. I made a buy here, stopped out, and that was it. So I mentioned in my channel, because I had posted this. Let me open my channel. You guys know my channel. So I posted this. I think this is today. Yeah, I posted this on my channel. I don't know. This is Monday. No, this Monday. I think. Let me see. Let me see. 20 January. Yeah. Yeah. That's the trade I posted. So this, so this is what I was looking at. Yeah. So this is what I was looking at, and what I was expecting. As you can see, price there moved low. I was expecting, maybe to take out these and these, moving forward. But it didn't do that. And I posted the same like for the pound. The pound I had already entered. I thought it was more clearer. I thought this was a breaker. And as you can see, the time frame is a 15-minute time frame. Yeah, it's a 5-minute time frame. That's not usually my time frame. I usually plan my trades on a 15-minute time frame, and then I just go there on a 5-minute time frame to confirm my entries and to see how price is moving. So I explained what was happening. GBP price not moving at all in drawdown, closing all the positions. So I just closed the position, one at break even, and one with the minus 10 pips loss. And when I closed, I saw this. I thought price was moving again. I showed you what I did, and the lesson learned. And another, yeah. I told my guys, off the markets, grateful for closing those trades earlier. Off the charts, I'll be looking with one eye. So usually when I mention like I'll be looking with one eye, I won't be posting my trades at all. I will just look at the markets, just in my bed, look at the markets from my phone or from my laptop or from my desktop. While just maybe watching a series, just getting a glimpse of what the market is doing. I was waiting for the New York Open. So as you can see, this trade. I lost it in the New York. So after I lost these trades, even on the GBPUSD also, after I lost these trades, so after I also lost these trades, even on the GBPUSD, I saw that maybe today is not the day for forex, because I was also looking at SP500 and I was seeing some good moves. The time I was losing the trades in the London session, SP500 was making some great moves, with little or no retracement. In the same move I was expecting in the forex markets, here it just panned out. 23 handles just panned out like that with no problems, with no drawdown, maybe just a little drawdown for an entry here, for an entry on the 5-minute. For an entry on the 5-minute. Let me make this for the entry on the 5-minute. Now after taking this market retracing here, I trace with this and this, then shift in market structure. The first the fair value, this fair value gap, market respecting it, entry here, targeting this. So I didn't take this trade, but I was just seeing how price was behaving when I was losing in the forex markets. So I got enough of it, and I decided, to look into these markets, into the 8:30 open, because there was news at the 8:30 open. So what I saw market. Now this was a confirmation, because this was now moving the way I expect price to move on all my A plus trade setups. Let me remove this London session so that it becomes clear what I was seeing. So I saw this. I saw this buy side liquidity, market retracing to this fair value gap, creating a swing low, and from that swing low we'll find our shifting market structure. We'll find our shifting market structure, and then come into 5-minute charts. Yeah, so something like this. So when I was looking at the charts, I was waiting for the 8:30 open to see how price is reacting. So I saw this move, high, low, high, high, low, low, creating a fair value gap, and also this inversion fair value gap, and also this inversion fair value gap with our breaker here. That's the another swing low, which led to this stop hunt. So like this. So this was basically stops. This stop hunt. So this is what I was looking at from from the SP500, from the features. So this is not a trade I would take. Like it didn't close below this swing low. So after such a move like this, it closed below this swing low. With a breaker. So I also didn't take this because the candles almost went over this, so I wasn't sure like what's happening. But when I saw this on a fractal, price took out this, trapping the traders which trail their stops here. It took out this. I saw this also as another fractal. Fractal is when the price on a higher time frame behaves the same way on a lower time frame. So I saw this as a fractal, and from that I saw this as a shifting market structure. I saw this as a shifting market structure. So now I'll move this. I saw this as a shifting market structure, creating a fair value gap. This was from 8:30 to 9:30, and then it respected the fair value. It respected the fair value gap. It respected the fair value gap. It didn't close above it, and yes, that was my entry, targeting this low. And this is how I was able to to get a feel. And this is also liquidity, right? Yeah. And this was fast. So this is another reminder, guys. So when the price is moving in your direction, like when the market's behaving like algorithmically correct, like when there's no manipulation, when there's no tweaking on the algorithm, when everything is in good conditions, the market is supposed to just move swiftly, making moves, no delays. So yeah, that was basically it. So on this trade, let me show you what I was looking at. So that was this trade. I was watching it from my bed. As you can see, this is not a screenshot, which means that I was just watching it, sort of kind of binge watching. But this was my entry, 300 something ticks, in my buy limit, like for my buy limit for my first take profit, and my final target. And you see where I entered, and this was it. After it was complete, this is where price was able to move. And I mentioned like, watch this one, watch this one with one eye as mentioned, then boom, tagged. Yeah. So basically, this is my day. I invite you guys to just join this mentorship. Not a mentorship as such, just join me on my trading journey. If you want to see me, doing more of these videos, or if you want to be with me in my trades as I trade, in my journey of being successful, the top 1%, and believe I'm on the right direction. This is just a confirmation that I'm moving in the right direction. But I'm actually glad because I managed to stop these trades. Almost most of them are like on break even. Almost most of them. I only lost something around $20 on this trade. Then I was able like to gain. everything from this trade, from this one. Yeah. So until next time, like and subscribe. I'm also sure today we have news. So after I move such like this, I'm also sure what's going to be, how this day is going to be like, how today is going to be like. We have already seen the market, creating high highs, but not for the Nasdaq. Nasdaq hasn't yet created high highs, so maybe that's something to watch. What's going to happen? And for these ones, wow, it was just choppy. It was just choppy. You see, I discovered like it was choppy when price, took so much time in one fair value gap. So what I learned from my city is like when you see price behaving like that way, when price, yeah, that fair value gap you're expecting to make your entries. When you see price retracing to that fair value gap, it should run away, like making big candles. But in my case, it wasn't making candles. You see how many times it traced to that fair value gap. Of course, sometimes it works like this, then going to a target, but those are not the market conditions you would want to be in. There's a lot of mental capital lost in such trades. Like, you're panicking, you're thinking, should I stop? Should I move out? What should I do? So, as a you know, as a lesson, this is not how you want market to behave. You just want the market, to trade. Let me show you. Maybe there's an example where there was a good trade. Yeah, like yesterday's trade, what the market did, it just entered and started creating up close candles, retracing a little bit, then moved fast, not even retracing to this fair value gap 5-6 times. And especially on a high time frame, like for me, I consider 15 minutes a little bit quite higher, even 5 minutes. You see how many times the market retraced to that. That's not how the market is supposed to act. Even this, it's not my trade. It's not my trade is trading strategy. But you can see the market retraced to this small shift in market structure. After taking out this, retraced to this 1-2 times, then boom, it went to the target. So this was supposed to be the same thing, but it didn't do that. So I ended up like over trading these are 3 trades and 2 in GBPUSD, then the final one which made everything change in SP500. So this is also another reminder that you're supposed to be patient, wait for your pattern. If you make your entries on a 15-minute time frame, let it be a 15-minute time frame confirmation. Don't try to rush the market. If the market is moving algorithmically and if you have everything intact, if you have learned everything and you are sure about yourself, the market is always going, to move to your direction. So until next time, guys, I think that's all for today. For today, the 20th, and for today, the 29th, depending on where you are. I'm in Siberia, and this is the weather for today. Yeah, this is just for fun. I'm just showing this. I'm just showing you this just for fun. You see how the weather is today. This is my weather today: -16 degrees and -17, -27, -25. Yeah, that's my life here in Siberia. Until next time.